welcome back to another video. Today I want to talk about doing the underwriting up front and determining whether it makes sense to either flip or hold the property. I'm seeing a lot of refinances where borrowers are having to bring money to the table either because the rent numbers don't look good and they had planned to flip it, or they planned to flip it, however they had to keep it for a little longer because the market was slow and they had to refinance their hard money loan because their lender wouldn't extend or whatever the case was. And so I just want to put some emphasis on doing the underwriting up front to make sure that you understand kind of the conservative approach. And this calculator, fliporholdcalculator.com, the link will be below in the comments. This takes 20 seconds and could save you thousands of dollars in your pocket. So it's really not smart to not do something like this. We see a lot of investors doing it, so we created a free calculator so that you can do it very easily. So on the screen, I've just got some example numbers here. These are just examples. I didn't pick these from any particular deal, but I just want to go through the process so you can walk through this yourself, and then you can use this tool for free whenever you want. So let's start with the property details. I picked a purchase price of $250, rehab of $50, and an ARV of $400. The rehab loan amount, right, $265. Again, just an example. That might be a loan we would offer on a deal like this. 12% rate for 6 months. Closing costs when you purchase the property. It is interest only, so you're going to pay interest during the term of the loan. Now, on doing flips, something that I see investors not underwriting is your monthly holding costs when it comes to like third-party costs, so taxes, insurance, whatever. You should underwrite those to get a very precise profit. Okay, so example numbers. Now, rental analysis and flip analysis. So the flip analysis is going to be done for you. It's going to tell you your total cost. It's going to tell you your total investment, and it's going to tell you your projected sale price, which would be the ARV, and it's going to tell you what your net profit is. And this also includes, by the way, we included a 6% realtor fee in that as well, which a lot of people don't underwrite. So 6% realtor fee, you're going to make 60 grand on this deal, or about a 20% ROI. Wherever your threshold is, stick to it and don't waver on that. If it's not the profit margin you need, don't get into the deal or negotiate something much lower. As far as the rental goes, again, estimated numbers just based on kind of the loan amount. So we got a 80 LTV loan on the ARV, 3,500 rent, taxes, insurance, no HOA, assuming some property management. Now, permanent loan rate. During the year after COVID, I saw a lot of people, and you can just Google this too, a lot of people are getting hit by the rates not being where they thought. So this could be today's rate, but if I were you, I would underwrite this at a worse rate, right? Just underwrite it worse, and if it works worse, it's likely to work in the better scenario. So be conservative. If you add a point, add a percent to your rate just to see if the deal's going to pencil. So now we get our income and our cash flow, and then we go down to our investment target. So you pick these. You pick whatever these are. So if your target cash flow is $500 a month, you're obviously not going to get it, so it's not a good rental, but it might be a good flip. Conversely, if you need to make $75,000 on each flip, and or you need a cash flow of $500 a month, this calculator is going to tell you, hey, this deal doesn't work for you. So you need to go back up to the drawing board and figure out if I need to get a lower purchase price or what I need to do. Because now if I lower the purchase price, I meet my targets. So that's a tool for you to use for free. Again, it is flip or hold, all one word, fliporholdcalculator.com. We'll see you in the next video.